Hello, trading is closed for the year 2021. Happy New Year to everybody. Wouldn't be a video without my disclaimer. It's my trading plan for Monday, January 3rd, 2022. Please remember I can be completely wrong. Any trade you make should be at your own risk. Look for the pattern with the early low. This is it. Monday should also have the early low. We said weakness on Thursday should lead to additional weakness today, and that's what happened. We made the case for the high of the move being in. We said all we needed was confirmation. That's not convincing enough for me. 12 points used to be a lot, but it's really only 1/4%. A lot of the drop came right at the end here. The timing of this move on New Year's Eve certainly suggests it's tax-related selling and not the real thing. If it is tax-related selling, it should be reversed quickly when we open on Monday. The only catch in this is that the wall into the close doesn't always work on a Friday, because often the last move on Friday just follows through into Monday. If we gap down instead, which I can't rule out, that probably would give us the confirmation we need. But as we'll see, there's a number of reasons to believe this will be reversed quickly. If this were really confirmation, I'd expect this to be dropping all day and not wait till everybody went home. Well, during the day, MEJT targeted a higher price. It's a target, as always. It isn't an entry. This drop was called false. We got the higher prices. All these squiggles were deemed unsustainable. They've already retraced, and that's played out. Now, the end of the year is typically when we look and see how MEJT did during the year. We had about 650 targets a year. We have one ultimate which didn't print. We have 6 standard targets which didn't print. So about 99% of all the targets printed. They didn't all generate trades, but about 99% printed. And for most systems, that would be pretty good. But let's see how it works in the past, how it compares to the past. System is 19 and a half years old, so here we have 20 years of track record. You won't find any other 2-year or even a 3-year period where you had 13 unsatisfied targets. In fact, in 12 of these 20 years, every single target has printed. Now, I have had other periods when I've had 13 and even over 13 unsatisfied targets over 2 years, but in the past, they haven't stayed unsatisfied. Going back to 2002, when there are this many targets, at some point we retrace and cross some of those off the list. Doesn't mean it has to retrace now. Doesn't mean we can't go higher first, but that's the track record. We had 7 other ultimate targets which didn't print, and this year we saw the 8th. So 8 targets in about 19 and a half years, about every 2 or 3 years, I get an ultimate target we haven't seen. It's out of 150 targets a year, so just under 3,000 targets, and I've got 8 which haven't printed. So there's a pretty good chance we'll see the ultimate target from this year at some point. But again, it doesn't tell you when. We're still hoping this thing works, this count works. We still need more confirmation than I've seen. This really hasn't dropped enough to convince me yet. I'd like it to work, but you really want to undercut some significant levels. You want to see an impulsive structure down. Neither one of those things have happened yet. Here was our count up to this week's high. Let's look at what's happened since then. Since then, you can count an ABC down with good fibs. Doesn't mean it's the only count. Doesn't mean it has to end right here. You could just keep on dropping and come up with some other count for sure. But when you have a wall into the close, timing like this, New Year's Eve, wave count compatible with the end being here, all these are arguments for the market gapping up and overtaking this high on Monday. Of course, if that doesn't happen, if we gap down smartly instead, that would be a big step towards the confirmation I'd like to see that the high's in. And we won't know that until Monday. Well, Monday's pattern has a really low. That doesn't mean you won't gap up. These are my calls for next week, early low. Typically, it's a rally day, final hour high. The day's weak, the additional weakness should follow in the days to come. The wall on the Friday's close likely was related to tax-related selling, and if so, it should be reversed promptly in Monday's open. The wave count also argues for a higher open. That doesn't guarantee a higher close. Bears still need confirmation of the week's reversal to have confidence that we've seen the top. I'm not yet convinced we've seen it, and the breadth actually improved today, which wasn't what I wanted to see. But of course, when it's year-end, a lot of these trades aren't based on anything other than income tax considerations. That being said, unless this week's high falls, I think we see much lower prices in 2022. So it's the pattern with the early low. Often, when there's a big drop on Friday, it follows through Monday. It'd be nice if that happened, but there's a number of reasons to believe this isn't the real thing, and we'll gap over this high when we reopen. We won't know that until Monday. Monday has the early low. The open's going to tell us if this is real or not. Happy New Year to everybody, and I'll see you in 2022.